Good afternoon from the ICC here in Durban, the home of the 2017 World Economic Forum for Africa. My name is Bonnie Tunya, and welcome to this special broadcast where CNBC Africa, in conjunction with MasterCard, will bring you conversations about how technology is set to drive financial inclusion in Africa. Without wasting much time, allow me to introduce you to my eminent panel that will be guiding this conversation in the next half hour. First off, I'd like to introduce the Honorable Clever Gatete, Minister for Finance and Economic Planning for the Republic of Rwanda. Okay. Next, we have Dr. Martin Davis, who's the Managing Director for Emerging Markets and Africa at Deloitte. Last but certainly not least, the person who pays the rent here today, Raghu Mahlota, who is the President for the Middle East and Africa at MasterCard. Gentlemen, thank you very much for making time, and obviously this comes smack in the right of the themes that we're talking about today. Minister, I'd like to start with you. We talk about inclusive growth, and we've talked about tech as probably the silver bullet in achieving financial inclusion for the African continent. Give us a status update of where we are and in respect to your country, Rwanda.
No, thank you very much. Let me say that before we talk about the financial inclusion, I think the technology part becomes very, very important. And that's why Rwanda, within the year 2000, we started with a vision of making Rwanda an ICT hub. And we started by actually laying the infrastructure of the ICT. We have the broadband that covers the whole country. And then we started by attracting some of the companies that we can work together. Right now, we have the sustainability of that infrastructure because we are now rolling out the 4G LTE over the country, and we'll be able to cover 97% by the end of this year of the whole country. And next year, we'll be covering the whole country. But at the same time, for sustainability, we had to bring in institutions like the Carnegie Mellon University. Within the special economic zone, you have 64 hectares, which is the ICT hub, I would say that. We have the Institute of Mathematical Sciences. We are developing the next Quantum Leap project, and of course, the next Einstein Forum. And so many, we have 4 centers of excellence that are coming in science and technology. That provides the basis for us to continue in that area of IT. And recently now we've seen how the combination between the telecoms and the banking system has helped to develop technologies that are helping all of us in almost all sectors. Be it agriculture, be it industry, be it services sector, we are seeing a huge change. When I was governor of the central bank, we had started saying that this is a new revolution. We thought we were doing a very wonderful job by introducing the cards. But now, before we finished introducing all the cards, we saw this time the mobile taking over almost everything. The merger between, almost in terms of services, between the telecoms and the banking system, changing the whole landscape. Right. And that has helped us in Rwanda for financial inclusion. Just to give you an example, in 2008, the financial inclusiveness in terms of the people, formal and informal, accessing financial services were 48%. Right. After 4 years, 2012, they went to 72%. Now, last year, when we did another Finscope survey, it was 89%. That gives you an idea. And that way, then, it becomes much easier, and we are seeing the currency in saturation. The money that is outside the banking system is now getting smaller and smaller. At that time, 2008, it was 27% of the money outside the banking system as a proportion of broad money. Now, it's 9.3%. Usually, the standard is around 2% of the currency outside the banking system. So you can see the impact of what we are doing, and what this means, especially for the monetary policy, is that all the money is in the banking system. That means there's enough money to lend out because most people are using the financial services. They are not withdrawing. Right. At the same time, for the monetary policy, the policymaker can now see the money in the banking system. Then you can easily take decisions that can make sure that can influence, either control inflation or make sure you can inject resources to make sure that you can support the economy to grow.
Right. Minister, you've laid such a very clear picture of exactly where we are now. And let me just jump you, Martin, come to Raghu for a moment. We talk about inclusion, and the minister has put a point of access or liquidity and allowing the money to flow in the economy. Your business is entirely about allowing people to make easier payments. But give us a sense of when we talk about inclusion, it's not just about people having that money. There's a cost to it. Give us a sense of how you and your business is driving towards this.
So first let me answer the question and add to what the minister said about you talked about the cost of, so you talked about the benefits. So just from our cost of cash, and we do cost of cash studies around the world, we did one recently in South Africa as well, which you can use as some sort of proxy. So it turns out that the cost of cash directly, indirectly is almost 52 basis points of the GDP, right? Now that's a really large number. So if you're talking about almost, you can add 50 basis points to a growth of an economy. So over and above money circulation, you can lend out better, just the actual cost of cash is that much. So that's one aspect of looking at why you need to go digital or cashless to some degree, right? Then if you look at financial inclusion and you talk about inclusive growth, for me it just becomes a sort of four broad pillars of what you do. The first is policy. All the things the minister talked about. You need a vision, you need to start thinking much broader at an economy level for your citizens. So one leg for us on inclusive growth is about policy. The second one is about access. You need to bring things as close as possible to the end consumer, to the citizen, right? The third one for me is affordability. You cannot try and bring infrastructure that you can't afford in different types of economies. So you need to bring affordability, and obviously the economics there matter. And the fourth one for me becomes education.
Right.
So even if you have all that, you've got to have your citizens educated on the benefits of actually using some of these products and services. And that's when you start to see the real impact of inclusion. That's what I mean about it. And this brings new models, by the way. When we talk about public-private enterprise coming together to do it, I think for me it's about government, private sector, and public sector coming together to actually make it work.
Let me just jump in. You mentioned about cost before I come to Martin. I mean, this cost, when you talk about technology, it obviously makes sense for financial services like yourself because it improves efficiency and your cost of operation is much lower. But is it affordable for the people who you're extending these services to? Because it might be easier for MasterCard with the latest technology to deploy so much. But to the ordinary user on the street, is this a benefit that is transferred to them?
Okay. So two things. First is we are not in financial services, so I've said this all with a technology lens around it. The cost of cash has got nothing to do with MasterCard's cost of cash or even the FI's cost of cash. This 52 basis points that I talked about is at an economy level, right? And like I said, there is a direct cost and an indirect cost. Let me explain that. And almost 60 to 70%, let's say broadly 60-65% is indirect cost that most consumers don't take into account. So what does that mean? If I have to go and access cash and go somewhere, I spend time, money, fuel to do that. They don't take that into account today, and that's indirect cost. So effectively, 60% of what I just talked about is what consumers are paying without actually realizing. So they actually think it's free, but in reality, it's not free. So 30-35% is direct cost. The balance is indirect cost that consumers are paying and they don't realize.
Which eventually is passed on to them.
Which is eventually passed on to them. So therefore, when you move to this cashless thing, you start. In fact, in that study, it was that almost 4% of wages are lost by way of time, etc., for the bottom of the pyramid, right? When they don't get access to these things because they don't have access to internet banking, etc. So their indirect cost is almost 4% of their salary, while at the top of the house, that goes down to, I think, less than 50 basis points, right? So the further down you are, when you don't get access, the more your costs are. So actually, this is a myth that it'll help the FIs or no. In the end, this helps the citizens because there's a direct cost to what they pay.
Let me just bring in Davis to his input, and then I'll get back to Minister Gatete because he'll have to leave early. He has another engagement. But Davis, we have just identified cost as a barrier to inclusivity, a barrier that obviously technology is trying to address. But from where you sit, how big a deal is the cost as far as inclusivity goes?
Well, certainly, I think, the people, the poor in our continent are poor because they're locked into low productivity jobs. Effectively, I think the notion of, you talk about inclusive growth, financial inclusion, I think a large part of inclusive growth is providing access to service networks for the vast majority of people on our continent, service networks being, for example, education, information, knowledge, but particularly finance, and hence the financial inclusion imperative here. We're moving from and the Minister was talking about fintech earlier, but stating the obvious, when you have such high capex requirements to roll out public goods, public services and public infrastructure to provide what has been a very traditional financial services sector, you use a phrase at the beginning, silver bullet. Is tech the silver bullet to address this and drive financial inclusion? I think it's a combination. It's there, the silver bullet is there potentially. It drives down cost. Base of the pyramid, large parts of the population are in this base of the pyramid component of the economy. Of course, affordability is a major issue. Tech will drive that down. But increasingly, if we're engaging or looking to provide financial services in a state environment where often the state itself is dysfunctional and is unable to roll out these services, then of course tech is the solution, particularly on the cost front, and again, just basic provision. So stating the obvious, yes.
Right. Let me just bring in Minister Gatete again. It's good to work on something when you have a goal, and I know Rwanda has a goal for financial inclusivity by the year 2020. Talk to us a little bit about that goal and how far are you from hitting it?
Yeah, by 2020 we should be really, as I said, the inclusiveness is now 89%. We should be really at 100% at that time. And the initial work that we've done has been paying off because we started by making sure that the whole financial sector, the banking, the insurance, the pension, they all have the necessary modern core banking system. And that's why you find all the banking system, they have the same core banking system as what you see in Europe and North America. That was done. You find Delta, FlexTube, you find T21, all of them are modern among the top 20. Now, the rest is now, what you've seen is the central bank. Because of that technology that has been put in place, the central banks in East Africa are now interlinked within the East African payment system. And now we're also trying to do the same for the trading platform of the capital market in East Africa now. For Rwanda, Uganda, Kenya, and Tanzania, now we are trying to interlink that. That way then there is a speed of how the money moves. And then at the same time we will solve the other issue of having the foreign currency because we are trading in our local currencies.
Does this also benefit the people at the very bottom of the pyramid who may not be in sophisticated business? Yes.
Now, once they did that one, it allowed the banks now to establish like agency banking, to establish now to link the banking system with the telecoms much easier so that you can use now any means. You can use the card, you can use the phone, you can use any internet, your iPad or laptop to be able to transact. In Rwanda now, it has helped in so many ways. Nobody goes to buy water. Nobody goes to buy electricity. You do it on your phone. Nobody goes to buy fertilizer. You do it on your phone. Nobody pays anybody. You do it on your phone. Their phone has become like another bank. So that way, and also in Rwanda, for us, we've gone beyond money. We've said the Rwandans need services, and we introduced what we call Rwanda Online. The Rwanda Online is used by everybody. You don't need to go and ask for the birth certificate or to get other services on local office. You just have to do it in your own home because there is Rwanda Online that is interlinked with the technology such that you can access it, you can use it at home. You can pay taxes at home. You can do the claims at home. You can use your phone on anything. So for us, it's a benefit economically, socially, and on governance when it comes to election, when it comes to sensitization, and so forth. In agriculture, when it comes to know exactly the weather, the prices, the seeds, and all that distribution, you do it on the phone. So the benefits are way, higher than any cost that you can imagine. And that's why you have embraced really the IT for us to become a platform. And we are happy that the people who have been here, we have been partnering with, such as the MasterCard, who have been working with us. Really, we are making progress in that direction that by the year 2020, for us, it is a time when we see the financial inclusion. And for us in economics, it's even very important because it helps us in terms of correcting the statistics so that we can know females, males who are lagging behind, who are getting what credit, who are so many information on governance, on the social side, on the economic side. That way you can see and measure properly the impact of technology and the financial services on our economic development, because it impacts on all the sectors.
Right, right. Minister, we'll have to release you because I know we have another engagement, but many thanks for having made time to be part of this conversation, albeit in the initial stages. But Martin, I saw you nodding and agreeing to a lot of things the Minister said. Let's pick up on a point he brought about. There might be some marginal groups that suffer most when you talk about inclusivity. Women have been part of this, and probably, Raghu, you've also encountered that in your line of work. What makes a particular people group susceptible to lag behind whenever we talk about inclusivity? Let's start with the women, for example.
Well, I think, again, the notion, there's various definitions of inclusive growth. Let me just take this in different tack for a second, is, especially in the context of South Africa, but other countries, inclusive growth, does it mean from a policy perspective more intervention by the state or less intervention and more enablement? What we've just heard from Minister of Finance of Rwanda is clearly this is a state, a government that's incredibly enabling through tech for new services, for new avenues of financial service provision. And ultimately, what I said earlier, it's about getting people out of who are stuck in low productivity jobs, i.e. agriculture particularly, perhaps into extractive industries, into more service orientated, giving them accessibility. So I think in Rwanda's case, we've seen the underpinning a lot of the tech revolution, almost, if I can use that word, that the Minister was talking about. We've seen a simultaneous or concurrent emphasis on female empowerment in that country.
Right.
And this is almost a fast track of change of traditional cultural traits in a society to support the vision thing that you're talking about,
right,
of how that country seeks to progress to a more, should we say, inclusive developmental type model.
Right.
It's not through a policy-directed state intervention in certain so-called commanding heights of the economy. It's purely about enablement through tech and giving the democratization of access of services and allowing people to plug in through efficiency services into new networks,
right,
and networks which ultimately raise their productivity and ultimately pay. I think that's sort of the key lesson I'm hearing here.
Right. Raghu, when you talk about some of these gaps that still do exist when you talk about financial inclusivity, we've mentioned that there are, like the women situation, for example, there's special situations they find themselves in that make them lag behind. In your experience, what are some of these challenges that bring about this?
Yeah. For me, the first thing is really about control when it comes to women, right? So in many of these emerging markets, it's the women who actually segregate what the total income of the house is and actually put them in the various buckets that they need to put them in, whether it's education, whether it's for how much goes to food, etc., right? In an environment which is very cash-driven, right? You've got all sorts of complications that come through. Better budgeting, can they do it there? Do they actually have complete control of physical cash or no? So I think the more digital tools that you enable them with allows them to have much more control of where that comes through. So Martin talked about a series of things, so I won't touch on them, so I could kind of agree with what he talked about. So I'm just taking it down to a very basic thing.
Right.
At the grassroots level, if you give women more control of the finances, they actually try to drive more things. It even drives things like savings,
right,
more than that. So I think it starts to bring that in.
Sorry to jump in. Does this then mean we need to design tools that are specific for these groups, for women, for young people?
Yeah. So if I go back to what I talked about in the beginning and what are what's required for financial inclusion, one of the things I talked about was education of consumers. Right. This would be the sort of thing that actually falls into education. So when you design something like that, you design services, products, which are designed for very specific segments, and the access then comes into being. So you design it around that, they get access to it, and it's affordable, and they know what to do with these product lines, as that's when it starts to really come through, right? So if I take the women example, that's really back into
right,
the 4 pillars that I talked about.
Martin, connectivity of the internet has remained a big challenge across the African continent. There have been tremendous efforts by different governments and economies to invest in this. And we are running fast to the quest of connectivity and internet for all, because ultimately this rides on a lot of things. But give us a sense of how do we improve this? Will it take policy formulation? Will it take investment incentives to get a lot more investment in this? Because cheaper internet has a direct correlation to financial inclusivity.
Well, let me expand your word
Sure.
of connectivity. Look at the European Union, the 4 freedoms. The freedom of movement. Imagine an Africa that had the 4 freedoms EU style. Freedom of movement of people, of capital, of goods, and of services. Now, I think most of us will agree that we have the freedom of goods. Everyone will agree with that. Liberalized trade, movement of capital. We all agree on that. Services, that's great, but it's a very emotive issue. We talk about the connectivity and movement of people, i.e. talent, ultimately. And how do we as a continent drive connectivity beyond the internet? Ultimately, capital, innovation follows people.
Right.
If we're not liberalizing the connectivity of people, it's sort of a tangential point to your initial starting question, but I think in terms of, for me, connectivity is beyond just the bricks and mortar, the wires, if you will, the broadband that it provides,
Right.
but what this continent really needs, and this is to start to break down the extreme heterogeneous, fragmented nature of the African economy, and this
Right.
is the greatest challenge, I think. And Rwanda, as a country, has been very progressive in the EAC region to try and drive this, but it's around connectivity beyond the basic assumption. And as I say, is that tech, innovation, entrepreneurship, even investment follows people. Generate the best minds you can, create and attract, or not just beyond create, but attract the best minds you can, and watch magic happen. That's the connectivity I want to see happen.
Interesting. Raghu, your take on this whole connectivity question?
So in many ways I agree, and I'm going to add a 5th pillar to what I just talked about based on what Martin said, right? And that's interoperability. So you talked about connectivity. Yeah, I will. So if you build ecosystems that are contained and closed loop, you don't get the power of scale and efficiency. It doesn't matter whether it's about people moving in there or it's about accessibility of internet. In the end, these systems need to be able to talk to each other and actually have interoperability. Rwanda is a very good example. So when the minister talked about how we work with them, I think one of the key pillars that we're putting in is interoperability between ministries, between departments, through the whole supply chain. Right? And that for me is the big take on saying it's connectivity, yes, but in the end it's interoperability. If you don't have interoperability, eventually it dies because it doesn't have the scale that it is. So that's the next leg of connectivity for the way we look at it.
Right. And if I may, as was alluded to, is financial inclusion beyond the obvious, as also alluded to it, is in far more enhanced fiscal governance. And certainly it allows for the traceability, trackability of capital across our continent. We all know what a challenge corruption or leakage is in terms of national fiscus out of our economies. If we're moving towards a more financially inclusive, cashless, if you will, digitized monetary system.
Right. Yeah, because we have the integrated financial management system in Kenya that was introduced just a couple of years ago, and you'd wonder why would it just come now after all this effort in Africa, right?
It undoubtedly ultimately the end conclusion of this is enhanced fiscal management through transparency and trackability.
Right. These are the joys of live TV. I think that's some vuvuzela happening. That's how you know we're in Durban, South Africa. We'll try to speak as loud as possible to be above the noises. But gentlemen, let's proceed. So we've addressed those 2 issues, and Raghu, I wanted to bring a very specific point. When you look at card usage across the continent, is different in the different markets that operate. For example, South Africa has a much wider card usage as a payment system than, say, East Africa, which is heavily reliant on mobile money. What determines this set of behavior in a market that is different from the other?
Yeah, see, the card is, in the end, is an old-fashioned form of carrying a transaction. In the past, you didn't really have the technology that existed with the people, right? And therefore, they actually went to a place which had the technology that allowed for electronic transaction to take place.
Right.
Today, that power, computing power, sits in your hand. So I actually feel that's redefining that. So yes, there are segments who, or wherever infrastructure was bedded down, you had card usage that went in a particular way. But actually, card is just a form of an electronic transaction in the end. And now in various economies, people are leapfrogging that
Right.
into doing different kinds of transactions electronically, right? Again, back to the financial inclusion, inclusive growth story in there. So I just feel infrastructure is changing quite dramatically. I don't know whether you picked this up recently, but we launched a new kind of product, if you can call it,
Right.
which is effectively in Africa, which was a global launch, by the way, in Africa, which is the world first, which is basically customers now go into shops and use a quicker a code, a QR code,
Right.
take a picture, and then they send the transaction, and a merchant gets an SMS saying, you got paid.
Right.
It's completely the reverse of what the current, what you call the traditional card environment was. That doesn't require you to put a point of sale terminal. It doesn't require you to put any hardware.
Right.
And therefore, that will change the investment horizon for people on how much they need to invest. And it starts to again become access and affordability. So now you can actually go to a corner store right next to my house,
Right.
and all you have to do is put a little sticker there,
Right.
and then you start that usage again. So as much as those trends exist and I can spend half an hour over them, in my mind, that's history. We learn from that, but the future will look very different on how electronic transactions will go through. Just like how mobile phones became the norm in emerging markets over landlines,
Right.
the new transaction flows will become very different to what you saw happening in the old traditional segments.
Right. And Martin, just speak to that whole, how does a peculiar people behavior affect the pattern of whatever is rolled out for inclusivity efforts in a particular jurisdiction? I mean, we've just talked about the card situation, and it could be because this is the technology that came to them first or whatnot, but how does behavior, consumer behavior, affect efforts of financial inclusivity?
That's a tough one. Look, I think it's, Raghu was talking earlier about education and the domestic culture almost of a country, of a society. It's not what I think often we look at the, if I can relate this in more sort of per capita income economic terms, but what I see and is prevalent, we look at the macroeconomic data of a country and we look at income levels, we look at PPP, purchasing power parity levels,
Right.
but often it doesn't sort of match or rack up to the actual spend in that society. And this is what a lot of the retailers expanding across Africa always look and say, what's the actual spend of a consumer, what's the consumer's behavior? And there's a significant difference between affordability of that consumer, or affordability, being able to purchase something, and propensity to spend.
Right.
And I think there's a disconnect between the two often. So when looking at the consumer behavior, I think in certain societies are more than others, but I'm seeing in particular key countries in our country. In South Africa, for example, now, you talk to retailers, and it's not so much when the consumer middle class perhaps is arguably slightly shrinking, per capita income is slightly shrinking under pressure, and yet spend remains robust. It's not so much as affordable as there's a propensity to spend. And that's also a consequence of how deep your capital markets are, the access to credit a consumer may have. So I think it's, just a brief point. It's too simple, superficial, perhaps.
Right.
You look at these things in a far more a wider entirety than just sort of a consumer behavior, psychological.
Raghu, you want to sneak in something in 10 seconds?
Yeah, so what I was just saying is that, I think you haven't seen the real power. What's going to actually happen is when these flows, is when you start to see the flows coming through in a transparent marketplace, you will start to see that propensity start to change. And the SMEs, when they start to see the flows and people start to see that, you'll get better credit quality, you'll get better credit lending, you'll actually have more services come through. So I think this is just the beginning. I'm just going to add to that whole propensity is that when you start to see the flows, you'll start to see more of these come through as well.
And financial inclusion.
So we haven't seen nothing yet.
Financial inclusion results in consolidation.
Tip of the iceberg.
Right.
The market informal is normal in this part of the world predominantly, and we're going to start to shift towards consolidation through financial inclusion. And then we will see, as Raghu said, a far more accurate picture of a real African consumer spending.
I dare not add anything because, gentlemen, we're out of time, but Thank you very much for being part of this very dynamic conversation. If you've just tuned in, we've been speaking to Raghu Malhotra, who is the president of the Middle East and Africa for MasterCard, as well as Dr. Martin Davies, who's the managing director for emerging markets and Africa at Deloitte. We've had an interesting conversation about inclusivity in Africa with a soundtrack of the Vuvuzelas of South Africa.